Something significant is happening in the world of energy. The landscape is shifting in ways that will affect not just economies, but also the balance of power on the global stage. For a brief moment, the United States was the undisputed king of oil production and exports, reshaping the global energy market with its rapid rise. American shale oil gave the U.S. unprecedented influence, allowing Washington to use energy as a powerful foreign policy tool, shaping alliances and pressuring rivals. But that era is ending, and the signs are becoming impossible to ignore. Recent data shows a sharp decline in U.S. oil exports, with numbers dropping faster than many experts predicted. The world is changing where it buys its energy, and America is being left behind as new suppliers step in to fill the gap. This isn't just about numbers, it's about influence, national security, and the economic stability of millions of Americans whose livelihoods depend on the energy sector. The shale revolution turned the U.S. from a major importer to a leading exporter, giving it leverage over energy giants like Saudi Arabia and Russia, and shifting the global power dynamic. Now, international buyers are looking elsewhere, forging new partnerships and diversifying their sources. The reasons are complex. Policy choices, economic shifts, and a changing global attitude toward American leadership all play a role in this transformation. As U.S. exports fall, its power to influence global events and shape international markets diminishes, leaving a vacuum that others are eager to fill. OPEC+, led by Saudi Arabia and Russia, is stepping in to fill the void, asserting their dominance and setting new terms for the global oil market. New alliances are forming, and old ones are being tested as countries reassess their energy strategies and allegiances. Nations that once relied on the U.S. are now building stronger energy ties with OPEC+, seeking stability and new opportunities. The jobs created by the shale boom are at risk, and America's trade balance could suffer, threatening communities and industries across the country. Understanding why this is happening is crucial for the U.S. to face the challenge ahead and to chart a new course in a rapidly evolving world. The era of American energy dominance was brief, but its end could be just as impactful as its beginning, with consequences that ripple far beyond the oil fields. The world is quietly realigning, and the U.S. is no longer at the center of the global energy conversation. The consequences are already unfolding, affecting everything from global prices to geopolitical alliances. The question now, can America adapt before it's too late, or will it watch its influence slip away? The global energy order is shifting, and the U.S. must decide its next move if it hopes to remain a key player in the world's energy future. The decline in U.S. oil exports can be traced directly to the trade war that began during the Trump presidency, a period marked by escalating tensions and economic uncertainty. Tariffs were introduced with the intention of protecting American industries, but for the energy sector they ended up having the opposite effect, causing more harm than good. China, which had been a top buyer of U.S. crude oil, responded by imposing its own tariffs in retaliation, making American oil too expensive and unattractive for its refineries to purchase. This move sent a clear signal to the world that buying from America now came with significant political risks and potential disruptions. The ongoing trade dispute created a climate of uncertainty, prompting countries around the globe to diversify their energy sources and seek out more reliable partners. Saudi Arabia and Russia, not entangled in these trade conflicts, quickly became more attractive and dependable partners for global buyers. Even after the trade war cooled down, the damage was done. Trust had been broken, and relationships were strained. Asian buyers seeking stability signed long-term deals with OPEC+ nations, locking in secure supplies for many years to come. Rebuilding that trust is not easy. It requires more than just offering competitive prices. It demands consistent reliability and a sense of partnership. The tariffs, which were intended to help America, instead ended up strengthening its biggest competitors and weakening its own position. Experts widely agree that this was a critical misstep, a strategic error that had far-reaching consequences for the U.S. energy sector. The trade war taught a painful lesson. Aggressive, unilateral actions can easily backfire in a globally connected energy market where trust and stability are paramount. The U.S. inadvertently pushed its biggest customers into the arms of its rivals, losing valuable market share and influence. OPEC+ was ready and willing to offer the stability and predictability that America, caught in its own policy turmoil, simply could not provide. Another major factor in America's oil decline is the weakening U.S. dollar, a shift that's quietly transforming the global energy landscape. For decades, Oil was traded almost exclusively in dollars, giving the US a huge economic advantage and cementing its role at the center of global finance. But as the dollar weakens, this system is unraveling, and the rules of the game are changing for everyone involved. A weaker dollar makes US oil cheaper for foreign buyers, which can boost exports, but it also erodes profits for American producers and creates uncertainty in the market. Major oil-producing nations and big consumers are now increasingly trading in their own currencies, bypassing the dollar altogether and reducing their dependence on the US financial system. Russia and China, for example, have struck significant oil deals in yuan and rubles, signaling a clear shift away from the dollar's dominance. This global de-dollarization trend directly challenges American power and the influence it once held over international markets. Every non-dollar oil deal chips away at US influence, making it harder for America to shape global economic policy. For buyers, trading outside the dollar reduces their exposure to US sanctions and financial policy, giving them more freedom and flexibility. Countries are now building new financial systems and infrastructure to avoid American oversight and create alternatives to the dollar-based system. As less oil is traded in dollars, global demand for the currency drops, weakening it further and creating a feedback loop that's hard to reverse. This could lead to higher inflation and borrowing costs in the US, affecting everything from consumer prices to government debt. The petrodollar system was once a cornerstone of US dominance, tying global energy markets to American prosperity and power. As it weakens, so does America's ability to project power through economic means, and its influence on the world stage begins to fade. The world is moving on, and the US must adapt to this new reality or risk losing its financial edge in a rapidly changing global economy. America's shift toward isolationism has hurt its energy influence. The America First stance signaled a retreat from global leadership. Allies in Europe and Asia now question US reliability as an energy partner. Reduced diplomatic engagement and withdrawal from international accords have sent a message of disengagement. Countries can't risk tying their energy security to a partner that might change course overnight. Russia and Saudi Arabia have filled the vacuum, offering consistency and long-term deals. Their message is clear stability and focus on energy, not domestic political debates. America's inward turn has weakened the international system that once benefited it. By stepping back, the US has encouraged others to make their own arrangements, often with rivals. The result: diminished American influence in a global energy market shaped by OPEC+. The world is reorganizing itself, and the US is no longer at the center. The cost of isolationism is now clear in the energy market. As American oil exports become less reliable, Europe and Asia are pivoting east. European nations are signing long-term contracts with Middle Eastern producers to secure supplies. Asia, the world's fastest-growing energy market, is deepening ties with Russia and OPEC+. China and India are buying more Russian oil, often at discounts, and investing in new infrastructure. These deals are forging long-term political and economic partnerships. Even smaller nations are striking deals with OPEC+ members, redrawing the world's energy map. The US is increasingly on the outside, watching as competitors lock down key markets. The new world order of energy is being built without America at its core. America's fading oil dominance has real consequences at home. The shale boom created hundreds of thousands of jobs. As exports fall, those jobs are at risk. A shrinking market means less drilling, less investment, and economic hardship in energy-dependent communities. A drop in exports worsens the US trade deficit and could weaken the dollar, fueling inflation. The loss of energy dominance erodes a key national asset. From a security perspective, US leverage to impose sanctions or influence world events is fading. OPEC+ control means American sanctions are less effective and rivals have more options. The US is ceding its leadership role to nations that may not share its interests. The global energy market is now more vulnerable to manipulation by OPEC+. America's economic and security future is at stake. Energy experts warn this shift is a structural change, not a temporary blip. Amy Myers-Jaffe says the US assumed its shale dominance was permanent and missed OPEC+ strategic moves. The International Energy Agency projects OPEC+ could control over half the global oil market by decade's end. Former officials warn Americans could again face price shocks from a foreign cartel. Harold Hamm notes that exporting energy means exporting influence. Stop, and rivals gain power. Military analysts agree. A world dependent on OPEC+ oil gives Russia and the Middle East more leverage. The consensus time is running out to reverse the trend. Regaining leadership will require renewed diplomacy, free trade, and a strategic vision for energy. The trajectory is clear. OPEC Plus is poised to dominate global oil markets. The power to set prices and influence the global economy is shifting back to Riyadh and Moscow. For Americans, this could mean volatile energy prices and diminished global influence. US diplomacy would lose a key tool, and the global balance of power would shift. Saudi Arabia and Russia could coordinate to keep prices high and reward allies. America faces a choice: continue isolationism or re-engage, rebuild trust, and compete strategically. The era of easy dominance is over, but the chance to lead remains, if the US acts decisively. Without change, the future of energy will be shaped in Riyadh and Moscow, not Washington.